Hi, this is a price action analyst. Welcome to my YouTube channel. I hope you like the new intro theme. I want to have a look at a trade I'm in. This is an option trade I'm in on Biogen, BIIB. So I'm in this with an option debit spread, a call option debit spread. So that means I've bought a 285 call option and I sold a 287.5. They're both August 14 options, so they expire this coming Friday. It's Sunday the 9th of August today. So they expire on Friday, so another 5 trading days. So yeah, 285 is the call I bought, and I sold at 287.5. And now I paid 0.8205 for those. So they cost me 0.82, and so the maximum is the difference between the debit spread. So if price expires on Friday above 287.5, so for example, if price is 287.51 and above, then that call option debit spread will expire for the maximum, which is 2.5. So I'm hoping to change 0.8205 into as close to 2.5 as I can get. And again, in previous videos, I've pointed out that I prefer, at the moment, option debit spreads to naked options. You'll see in this case the naked option, which would have been more lucrative, but I think, in the majority of cases, the debit spreads are much more forgiving. So just looking at this chart, I want to go into why I chose this. So the brown lines are support and resistance lines that I've marked out. So you can see price had substantially increased here, and Biogen seems to go through periods of consolidation and then big jumps. So we had a big jump here, and then you see all this support level was painted in and held. Every time price came down here to test it, there was a push off of that. And so, for whatever reason, price had jumped up here and sort of held the support level. This wick had, you'd seen it had acted as resistance. You'd seen selling off there, once, twice. The first time the selling had been rejected, and again around the support level. And the next time price had consolidated and ended up washing this level here. So as price washed that level here, you had seen a push off of that. So this consolidation could be framed up with these pink lines into like a descending triangle. So given this run up and then this descending triangle consolidation, I was expecting price to push out of here on the upside, which it has. So I'm just going to go into the dailies. So I entered this trade on the 3rd of August, which was here. And so why I did that is, so this is now daily bars. We're looking at that triangle consolidation that when it washed this pivot, and again it was an attempt to cycle down to resistance, which was again rejected, and it was part of this sort of big move up here. So there was a gap up here that just the buyers had defended this level relentlessly, and so when it jumped up here, it made a gap, and price hadn't filled the gap until here, and then price again tried to move down and it formed a wick. And so that, the gap had already been filled, yes, but this was another wash of this pivot, another attempt to push down here that had been rejected. So on this day I ended up taking a long position here, and again, within this big triangle consolidation, this move up here had formed another mini consolidation, which is, favoring the uptrend line. So it just seemed to me that it was giving every indication that it was going to push out of here on the upside. And so on the third, it looked like that. And I'll admit these days here, so there was 1, 2, 3, 4 days where it just, it kept getting to this level and coming down and coming up, and it just wouldn't push through it. And then on the Friday, I woke up and price had gapped up. So, so when I sort of expect price to push up on the upside here, I don't, I expect it to do that, but I have no expectation of how it's going to do that. So the fact that it gapped up here was just luck. It could have made a big buying bar out of here and a retrace and then a push up, or, there's a number of ways that it could have done it. So I wasn't projecting that price was going to gap up like that. I just expected a breakout to the upside here. And so this is evident of, when price coils, it tends to just push out when it breaks out of the coil. And so you got a big volume spike and prices up there now. So on the day I entered, it was about 275 and it closed at 305 on Friday. So my option spread went from 0.8 to about 2.0. But the only problem with that is, I tried to get out at, say, 2.1, and then as soon as you put in the order, it changes to like 1.8. And the reason I wasn't willing to take that, even though I've doubled my money, is that I was watching the price action intraday, and so we had a gap up and it moved down. But price is kind of, what it basically did, if you had price action up here, it would have been a spike up and a consolidation, and then it pushed out of here. So price still looked very strong on Friday. And so basically now I've got a sell order in at 2.45. And so my expectation really is that price is going to hold above 287.5 over the course of the next trading week. And so I'll be more sure of that if we can get price to push up past, the high of that day, which was 312. So we'll see what price does tomorrow. But if it starts to push up, that's a good indication. I will probably weather it if it comes down here, but if it starts to push below the low, I'm probably going to have to look to make an exit. So, I probably could have got 1.9, maybe. The options market is not really, I wouldn't say in quotes, a fair market. And if price comes against me, they're going to try and lowball me on the price. But I'm going to take my chances next week and see, my expectation now is it's at 305. I'm going to think it's going to hold above 287.5 for 5 trading days. And so something that's useful in that regard, if you look to where price has spiked up in the past, it doesn't just fill the gap right away. It's kind of meandered in that bar. Like if price can do that next week, I'm good. As long as it just doesn't come down and close the gap. Here it gapped down, and within 5 days, it didn't retrace very much. It took 2 weeks for it to close the gap. Here was a gap down again. That gap didn't close for about 2 weeks. So I'm gonna take the bet that price is gonna stay above, and then I'm gonna try to get as close to 2.5 as I can. So that is the Biogen trade. Again, the gap is really luck. I did expect a breakout. I mean, I took this trade hoping for a breakout to the upside, and I did expect it to be strong. But I never really expected that. But if you look historically at this thing, it's coiled and then gapped. it tends to do that. You know, it coils and then gaps. Coils and gaps. So I guess, you know, if I considered the price more, you might have expected that, but I don't. You know, this trade doesn't need a gap to work. It just needs, you know, it just needs a push out of there on strength. So anyways, I'll take it. So I just thought I would share that trade with you. That's Biogen BIIB. I took that on the 3rd of August, and they're August 14th options, and that is a call option debit spread. So thanks for watching. Please like and subscribe the video, and I'll see you in the next one. Thank you.